Fifthwall's Fund 3 represents the largest PropTech fund close to date. Fund 1, closed in 2017, was $212 million, the largest PropTech fund at the time. Fund 2 closed in 2019 with $503 million, and again was the largest PropTech fund at that time. Along with our European fund close in 2022, Fifthwall's Fund 3 represents over $1 billion of new AUM for PropTech. Fifthwall has played a critical role in the evolution of PropTech, and we've continued to propel it forward vis-a-vis our relationships between our startup companies and our strategic LPs. Fund 3 represents our first hybrid fund, comprised of an early stage vehicle and a late stage vehicle. So I'm here with John and Vic, two partners on Fifthwall's growth fund. So during the course of the evolution of Fifthwall from Fund 1 to now Fund 3, the strategy and the structure has changed. Can you kind of unpack what that means?
So in the early days in our Fund 1, we housed all of our investments in one strategy. It was a primarily domestic LP base on the corporate side and a domestic focus from a investment mandate perspective. In Fund 2, we internationalized the strategy. We raised capital from some of the largest and most prominent real estate owners and managers around the world. We diversified the areas we focused on from a standpoint of geographic, from an investment mandate perspective as well. But we still housed all of the early and growth investments in one investment vehicle. And now with Fund 3, not only do we have that great international strong LP base that we've built up since the inception of Fifthwall, but we now also have sector and stage expertise applied at both the early level and the growth stage one, and still can look across the globe for the highest quality real estate technology investments.
And John, why is that bifurcation so necessary?
So I think it's critical to have teams and partners focused on each stage, just given the uniqueness of what we need to evaluate. So going from seed to kind of Series B within the venture fund, and then Series C later all the way to pre-IPO, I think just really reflects our ability to provide different capital solutions to the various founders and startups in the space. It also helps us open up the aperture, right? That it is not only PropTech, but the adjacencies in the broader built world going across residential, commercial, industrial, and construction, along with fintech and all the different types of models that we look at, that we really have an opportunity to flex our LP base for all these different areas through a dedicated fund like the growth fund, and then also through the venture fund.
There is just an enormous opportunity in growth stage PropTech investing. And I think in no way does that diminish the opportunity in early stage investing, and that is in turn why we kind of broke our fund into two vehicles to better capture that value. So it's exciting to learn about this, and excited to learn about what that means for early stage as well. It was a natural evolution for Fifthwall to be able to invest across the continuum of PropTech companies, all the way from seed to pre-IPO businesses. So I'm here with Sarah and Dan, two of the partners on Fifthwall's early stage fund. And Sarah, one thing that's unique about what we're doing now is that in the early days of Fifthwall, we really didn't invest in seed, but now we've come to the conclusion it makes a lot of sense for where we should play. Why is that?
When we were first getting started, we had our 7 corporate LPs, and those were really, the early adopters of PropTech, and they at that time were barely willing even to really engage with some of the later stage PropTech companies that we were bringing to the table, because it felt very risky. PropTech felt very uncertain, and so it didn't really make sense to go as early as seed, because we weren't really going to be able to add that value that we really pride ourselves on, which is turbocharging distribution for our portfolio companies. Now, as PropTech has become much more popularized and we're at a place where we can really bring very early stage companies, and quite a few of our LPs, not all of them, but many of them, are actually willing to take that risk and be early adopters as early as the seed stage. So our ability to add value at those early stages has really increased pretty exponentially.
PropTech feels like it's basically table stakes now. To be in the real estate industry, you have to have a strategy around tech. But we are seeing the strategies kind of bifurcate and and scatter apart into different core themes. I know, Dan, you've focused a lot on some of those themes.
I think the adoption of digital technologies that enable everything from guest management to tenant experience on the corporate side, when you think about offices and the need to track people that are coming in and out of your space. I think another area that we spend a lot of time is the single family space and the institutionalization of that asset class. So looking at both the services layer and allowing kind of people that are actually raising funds to allocate capital into single family to be exactly that, capital allocators, whereas the service providers can actually be aggregated, managed using software, and then managed by another independent third party or a startup that allows you to use the best people in all of the different markets where you're home buying and selling. Property management is another area within single family that's been really interesting for us to track from an early stage perspective. There's a lot of interesting companies that are doing things both for the institutional side of that market, but also for mom and pops that own maybe 1 or 2 properties.
And thinking about the early stage PropTech ecosystem, when we started, because PropTech wasn't a thing, it was kind of new and probably weird for other VCs to look at this. But now we're seeing just a kind of mass recognition from venture investors that this is a really exciting place to invest because there's just enormous secular growth. How are you seeing that play out in your interactions with other VCs?
We actually benefit from having many of our companies that raise from fifthwall then go out and raise from tier 1 venture capital firms that you would think about as more generalists in Silicon Valley. And having them kind of alongside of us who can really be the real estate specialists, I think plays really well. I think also just thinking about the total life cycle of a company, we're actually seeing a lot of PropTech companies require additional growth funding that before they would sort of reach a certain point and either typically be bought or they would look for some sort of exit at an earlier stage. We're now seeing the requirements go from seed all the way up to pre-IPO type rounds. So bringing in some of the funds that can not only help us out at the Series A and B and C stage, but those that can help out in the pre-IPO later stages is actually really important for businesses as they grow and scale.
And so that domain expertise, that sector specificity that fifthwall has, it sounds like that's more and more valued by VCs. Are you seeing that, Sarah, in just the syndicates that come together?
Absolutely. I think especially in rounds where the prior round might have been led by a generalist VC and not a PropTech specialist, we're oftentimes able to identify areas of improvement that that company can make because we have experience with PropTech business models. And so our ability to bring our experience with more OpCo-PropCo type business models has been really valuable versus a lot of generalist investors who actually haven't understood that that cost of capital trade-off does exist and haven't necessarily told their founders to look for a debt facility or look for other partners as well.
So in the last 6 years, PropTech has changed across the continuum of early to late stage investing. And I think in the early stage, we're seeing so much new activity and so much new interest and so many new themes that there's just going to be so much to do over the course of Fund 3. Fifthwall's Fund 3 signifies our commitment to PropTech as we've evolved alongside the whole ecosystem's evolution. I'm so excited for what this $1 billion of capital means for PropTech. I think we have the ability to really help accelerate innovation in the real estate industry and encourage all of these new emerging PropTech companies to reach their full potential.